54 million barrels, which at the rate that it was drained last week is about 9 weeks left.
And the Federal Reserve is a prison.
No, basically it's a held-for-profit bank that sets interest rates and loans money to other banks.
And when I come back and bust your ass, we're locking David Ershon in the Federal Reserve.
You still didn't understand the concept.
Hey guys, Rafi here from the Endgame Investor. Now that gold and silver appear to have finally bottomed after 6 months and a 30% correction, as in 1973, which I talked about in this video here, or maybe it's on this side, I'm not sure. But wherever it is, I'll put a card. The question we're all wondering now is, what will be the domino that causes all of the other dominoes to fall? And though nobody knows for sure, it's looking ever more clear that it's going to be Japan. I'm going to make a case here that it's probably going to be Japan. Could I be wrong? Of course, because there's so many dominoes out there. It could be some unknown thing in Indonesia or Antarctica, or maybe a penguin revolt that causes some kind of financial calamity somewhere on the tip of Antarctica where they have a single gift shop. I do have a penguin from there, actually, from my uncle.
The penguins are moving above ground.
Not a real one, like, like a little crocheted purse or something. They're made by Eskimo slaves in Antarctica, I believe, though I could be making that up. But anyway, here I'll make a case that the yen is on the verge of implosion, and it lines up with the amount of oil that is left to be drained from the strategic petroleum reserve somewhere in Louisiana and Texas in those salt mines. We have about 9 weeks left of oil coming out of there until the Trump administration can no longer drain it anymore by law. And since all of Japan's oil since the beginning of the Iran war has been coming from the United States instead of Hormuz, when the SPR is up, the price of oil is going to go up very bigly. In other words, it's going to embiggen.
Embiggins? Never heard that word before I moved to Springfield.
I don't know why. It's a perfectly cromulent word.
And then Japan is going to have to try to strengthen the yen. In order to do that, it's going to have to sell treasuries, which is what it did in order to intervene this last time a few weeks ago or a few days ago or something very recently. Didn't accomplish much, but they sold a bunch of treasuries. I'll show you graphic proof, very graphic proof. It's going to be really explicit.
Oh, yeah. You're a bad girl, aren't you?
Bender.
What? Ooh.
But before we get to that excitement, this video is brought to you by Monetary Metals. Check them out in the link in the description below, where you can deposit gold and silver and earn interest in gold and silver terms on your gold and silver deposited with Monetary Metals. And for the gold and silver you want to keep with you, get a Dirty Man safe. Use the code ENDGAME10 at checkout for 10% off. And check out the Patreon at patreon.com/endgameinvestor. The last lesson that we did was how hyperinflation of debt is the equivalent of repentance. And I'll show you the biblical source for this. It's in Yirmiyahu in Jeremiah. If you're interested in biblical lessons on money and government in that sense, check out the Patreon at patreon.com/endgameinvestor. And let's go on with the slides. For the first slide we have today, the SPR, the Strategic Petroleum Reserve, is down another 2% this week to below 300 million barrels. You can see here the lines of descent in the weekly lines by percentage. How much percent the Strategic Petroleum Reserve is being drained every week. This line is where we were at last, 2% as of August 7th, I believe. And this 2% drainage of the entire stock is faster than at any time between 2021 and 2023, when the Biden administration started draining out the SPR in response to Russia's invasion of Ukraine. How much lower can we get on this? Well, before that, we can see here that the Trump administration is draining the SPR even faster than the Biden administration drained it in 2021 to 2023. You can see that from another perspective here. And here we have broken through the 300 million barrel mark. But let's go to an article from the FT by Wigglesworth. What's his name? Ron Wigglesworth, I think. Could the U.S. really release more of its strategic oil reserves Desperation in Thy Name is Scott Bessent. So this is from earlier August, I think, or August 4th or 5th or something like that. And these are two select paragraphs from this article. Link in the description below if you want to read the whole thing. Unfortunately, says Wigglesworth, there was only 155 million barrels of sweet oil and 261 million barrels of sour oil as of March 13th, according to the SPR's own website. That's because President Joe Biden ordered the release of 180 million barrels in 2022 after Russia's invasion of Ukraine caused energy markets to go haywire, and the U.S. has since been slow to replenish it. But here's the key paragraph. The Trump administration has already said it will release 172 million barrels as part of a wider, record-breaking 400 million barrel international release. But once complete, this will bring the SPR's holdings down to 244 million barrels. So that's where it's going, because the release of those amount of barrels was already authorized. So we're going to go to 244. We're now at 298. And he continues, Robin Wiggles. It's not Ron Wiggles, it's Robin Wigglesworth. And the government is actually barred by law from drawing down inventories if there's less than 252 million barrels in the salt caverns. So how much more do we have before it is exhausted? Well, if you do the math, it's 298 million where we are now, minus 244 million where we will get to, which is 54 million barrels, which at the rate that it was drained last week is about 9 weeks left. 6.12 million barrels were drained last week. 6 times 9 is 54. Could it be more than 9 weeks? Yeah, it could be 11, 12, 13. It could be 7, 8, whatever. It doesn't really matter. It's somewhere in that range, and that is when the SPR will no longer be pumped by law, because it can't be below 240 whatever million. And then the question is, what happens? Well, Japan doesn't get the oil that it needs. And if Japan doesn't get the oil that it needs because Hormuz is still blocked, because why would Iran open the Strait of Hormuz if it doesn't get everything it wants? It's America, the U.S. is not going to bomb its oil infrastructure and destroy its ability to produce oil, because that would cause haywire oil markets, which is precisely what it's trying to avoid. But if the oil price goes way, way higher, then the yen is going to die. Now, we had the Yentervention a few weeks ago when Scott Bessent left that stupid little post-it note on his desk for somebody from Reuters to photograph that said to do on his to-do list, buy $5 to $10 billion worth of yen. He left it there accidentally on purpose in order to mess with the psychology of currency traders. But whatever, it didn't really succeed that much. Because you see here's the trend line of the yen weakening since 2021. It started in 2021 late. It was trend line hit in 2022, hit again in 2025, and it crawled along the trend line in 2025. And then the yen continued to weaken. You have these little down candles over here. And also over here. Also, anytime basically there's a down candle, that means the yen is strengthening, and that means there's an intervention. So this intervention was huge at 150 or 160 something, all the way down to about 140. That was relatively successful. Then you had another intervention here at the beginning of 2025. But these little interventions, they're not even getting to the trend line, and they're pretty weak. So it's not exactly working. They can't even break through the trend line or even touch it.
You can't even see the line. The line is a dot to you.
And now, what is the problem for the US of a weak yen? What does it matter? Well, here's the graphic proof. So here you can see that the Japanese, the Bank of Japan, is the proximate cause for the rise in 30-year yields at the end of July and the beginning of August. You have in the blue line the Japanese yen rate. The lower it goes, the stronger the yen is relative to the dollar. In the red line, you have the 30-year yield. So you can see here on July 30th, 30-year yields of U.S. Treasuries, which is what Japan owns, along with 10-year and 20-year. I don't know what the mix is, but they own long-term Treasury bonds. July 30th, the 30-year yield starts to rise precipitously from about 5.12% to 5.25%. So that's 13 basis points in a few hours. And right after that, I think it's about 10 hours if you go through the ticks on this chart. I did it myself. So it's about 10 hours later, you start to see the yen strengthening. So what's happening here? 30-year yield rises, and then 10 hours later, the yen starts strengthening. So what happened? They sold 30-year, 20-year, 10-year treasuries over here. All yields went up in that time frame, in that maturity frame. And then 10 hours later, they start buying yen, and the yen strengthens relative to the dollar. So they sold treasuries for dollars. Then they sold those dollars for yen and the yen strengthens. This is as proof positive as you can get that it's the Japanese that caused the increase in 30-year yields at the end of July, the beginning of August. You can see it again here. This is the 30-year yield rising again from about 5.19 to a high of 5.28. That's another 9 basis points in just a few hours. And you can see here that at that time, the yen continued to strengthen all the way down to 156 per dollar from 160. So you have two waves here that pretty much shows the Bank of Japan is responsible for a spike in long-term yields. And that is what the US does not want because they can't afford it. And so they will go in and help and buy yen by leaving post-it notes on desks so that Reuters photographers can take a picture of them and say, whoa, the yen's going to strengthen. Everybody, go buy yen. And what if this intervention fails? And it obviously will at some point because it's getting weaker and weaker. Well, this is the technical chart of the yen going back to the 1970s. So here's the red line, the upper line that we hit, I think, just a few weeks ago. And it corresponds with the final support over here in, what is this, 1986 or 1987. And after that, basically the only viable support we have here is from 1978, 79, whenever that is. And that's at about 176 per dollar, where we are now, we're about 159, 160. And after that, it's just whoop, whatever is over here, it's above 200. It's about exactly 200. But once you have that, there's going to be a currency crisis, it seems. And the yen is in serious trouble, and it's very dependent on oil prices because Japan, as you know, as we all know, imports pretty much all of its oil. It doesn't produce any oil, virtually none. And because it relies on imports and because Hormuz is still blocked, it's getting its oil now from the United States, and the United States is getting it from the SPR. And the SPR is about to be drained to the minimum allowable requirements of 252 million barrels. And after that, there won't be any more being pumped. And therefore, Japan is not going to have as much. The United States is not going to have as much. The world is not going to have as much. And prices are going to go higher. And if that happens, the yen is going to fall. And when that happens, the Japanese are going to sell more treasuries, bringing rates up and collapsing the dollar along with it. Could it be that there will be some kind of left hook or right field or whatever the analogy is, some kind of rabbit out of a hat that somebody will pull that could keep this domino from falling for another few weeks? Yeah, it's possible. But right now, this is what to focus on. If the SPR can no longer be pumped and oil suddenly moves from 80, 90, $100 a barrel to 150, 200, the yen is going to die. And then they're going to sell treasuries and rates are going to skyrocket. And then you could start a domino effect. We'll see what happens. And if it does, gold and silver are going to be bid. Maybe not immediately because there's going to be a liquidity crunch, but after the Fed steps in, the Federal Reserve steps in.
And the Federal Reserve is a prison.
We all know what's going to happen. Credit is going to die, money is going to live, and all purchasing power is going to move from central bank credit to actual money, which is a thing. And gold is that thing. And with that, I'll let you go.
And when I come back and bust your ass, we're locking David Ershon in the Federal Reserve.
You still didn't understand the concept.